Hello, everyone. We'll give everybody 30 seconds to join us, and then we will start our session today. Just waiting for a few more people. I see people dropping in, so we'll start shortly, as I said. Everybody's in different sessions, so they probably need a bit of time to move from one to the next. Thanks for joining, everyone who has already done so. Okay, I think we'll start, and there are probably going to be people will keep coming in, but we'll start the conversation, and everybody can join us. Thanks, everyone. Thanks for joining. We're just going to introduce briefly the session today and the panel. That you've got a great panel here and great people with loads of experience that will give you their insights. So great opportunity to listen and interact as well. There is a chat where you can drop your questions into the system, and we will try to keep an eye on the questions and try to answer them as we go along, or keep them for the end. So do keep asking the questions. If we don't address them immediately, don't think we're ignoring them, but we will get to them as and keep the conversation flowing as we go along through the next about 15 minutes. So what I'll do is I'll start, as I said, with just a brief introduction of the session, and then just give you a bit of background for everyone who is in the panel, and then we're going to go into our conversation. So thank you very much for joining, Brendan, Hal, and Duke. So we've got our panel today, which is protecting financial institutions from security breaches and financial crime. So two big items that concern all financial service institutions. And what we want to cover today is dive into how we utilize specifically data science around addressing the challenges of AML and the experiences obviously our panel has, and then also talk about how we build a robust security and data strategy that obviously are critical in underlying how we manage all our risks as well with regards to AML, and also cover a bit the secure digital collaboration during the last period of time where working remotely has become a major aspect of our lives, and what does this mean in terms of the security implications. So again, you've got some great people that will give you their insights around that. So I'll start with Brendan Welter. He's the NSVP and a Chief Technology Officer and Security Officer in Sterling National Bank. He's responsible for enterprise-wide technology and security services. He's been working for 20 years, focused on building and leading innovative technology and cybersecurity and risk programs with diverse global businesses. So definitely, able to give us all some great insights there. We also have Duke Shaw, Deputy CTC and Risk Specialist in the Federal Reserve Bank of San Francisco. So Duke has more than 30 years of experience in the financial sector, and he has worked in two US regulatory agencies, the FDIC and the Federal Reserve. he was a member of the State Department's Anti-Money Laundering and Anti-Terrorist Task Force, responsible for assisting third world countries in establishing robust AML monitoring programs. So great opportunity that we have also the regulatory view of things into these conversations, because it's very important that we're able to cover that and make sure that what we do meets those requirements. And also we have Hal Lones, Chief Technology Officer of Trulio. Hal has been a software engineering leader for over 30 years, and he has pioneered the use of cloud-based machine learning and AI in cybersecurity. So he developed the first system to automatically classify the web for security threats. So great technology insights there as well. And you've got also myself, Vangelis Tsianaxis. I'm based in London, and I'm heading the analytics team within the AML Santander UK Bank. So also have a lot of experience working across data vendors, consulting, and the banks themselves, providing solutions with data and technology in addressing regulatory issues that our institutions are faced. I should just add before we go into our discussions that obviously everybody has an employer, but our views are personal here, not necessarily reflecting what our institutions that would think about the subjects we are covering here. So we're here to cover our discuss amongst ourselves and with you as well, and give our experiences that don't necessarily only come from, I guess, the latest institution each one of us is working, because everybody has a lot of experience here. So, we'll just go into our conversation now, and and I think I'll start in terms of with the first subject of data science and their role in AML. Obviously, this is a big subject in terms of how we're moving into using more data, more technology, and becoming clever in terms of addressing the AML threats. So, Brendan, if I go to you, do you want to give us a view of the role of the data science and what your experience has been around this?
Yeah, absolutely. I think it's an excellent question. Thank you for the introduction, and thank you all for having us here today. From my perspective, the data science capability is one of those horizontal capabilities that you can snap into any specific business problem. The one that we've been orienting to in this case is around AML, and why I think that AML could benefit tremendously and has benefited tremendously from data science is that the amount of data that the specific processes have to deal with. Being able to mine that data, to collect that data, very disparate data sources have been very informative to solve many problems that we've had in the past, whether it was around the customer due diligence and the beneficiary ownership, whether it was being able to do some more sophisticated business transactions as it relates to cutting across many different products and be able to combine those different data sets and use it in an intelligent way and answer some intelligent questions, if you will. If I were to take a step back and look at how I think the space has evolved over the last 5-10 years, I've seen it where we were building out large Hadoop environments where much of the time and investment went into kind of the creation of Hadoop environments rather than being able to focus in on the data wrangling aspect and getting some of the specific questions we have. Fast forward 5-10 years, and we really now are really kind of getting more and more equipped to no longer focusing on Hadoop, but these larger data warehouses that can enable us to ask more questions and get much quicker responses and allow us to drive energy and investment into specific questions to solving specific AML or specific BSA problems and things of that nature to really make sure that we can laser focus to the domain that we're trying to solve problems. At least that's my perspective, that what we've seen over the last, call it 10 years.
Mm-hmm. Absolutely. And how then, where do you see the value of the data science, in this new environment in terms of addressing the risks by having all these capabilities?
That's why I think how, I don't know if I'll let you kind of jump in, but I see that's why data science is a nice snap-on. Whatever business problem that you're faced with, snap on a kind of data science team, a data management team to be able to understand what questions you're trying to ask, what data sources will lead us to those questions. And a lot of the focus is no longer on some of the technologies to a certain degree, but being able to connect some of these capabilities and peoples and teams to the business leaders. Because typically in the AML space, you don't have deep technologists, you don't have data scientists, they have very deep business understanding of what problems they're trying to solve, and be able to take that data science team and snap it in to an AML team, BSA team, what have you, has been a real win for us in the last 10 years, if you will.
Mm-hmm. Yeah, thank you.
Yeah, I think Brendan brings up some really good points, and I think, you know, we are moving past some of the mechanical problems over the past 10 years. We've gotten into very sophisticated databases, very sophisticated analytics tools, and so we're able to kind of free ourselves up from some of the data wrangling, as you put it, into more of the sophisticated, let's go find problems. And, you know, knowing your customer and AML are definitely central problems here that we need to figure out how to assess risk. You know, when I you know, think back on, you know, ML, machine learning, and artificial intelligence, you know, one of the kind of key things that I've come back to over time is that human beings are only good at keeping track of about 5 or 7 attributes, you know, or in machine learning parlance, dimensions of a problem. And beyond that, you know, we just can't juggle all those factors in our brains. And so machines are obviously really good at that. And so they can get past those sort of human limitations. Or maybe you have, you know, one analyst that's good at one aspect of a problem, they have their 5 or 7 favorite attributes, another has their 5 or 7. Hopefully they don't quite overlap, so they're complementary. But a machine can bring together, you know, kind of the net effect of hundreds of analysts and apply them to a problem. So then you can find these very nuanced sort of signals in the noise to find, you know, AML problems or customers that maybe pose a risk, and then you can decide what to do about it. So, you know, I think we've really matured the state of the art on machine learning and AI to apply to these problems, and again, move past some of the mechanics in the past, and now we're able to sort of reach the next level.
Mm-hmm. And Duke, from, you know, we talk about maturity. What is the regulator view on that? Where do you think we are in terms of being able to do a better job of, you know, covering those risks and also being able to explain it to you?
Yeah, I can certainly say we're not ahead of the curve on that on that particular question. I think that, you know, we are, at least domestically in the U.S., we're monitoring kind of the evolution of this area. All the regulatory agencies, the FDIC, CFPB, OCC, NCUA, and the Federal Reserve have issued kind of an RFI, request for information, about kind of the use of AI and machine learning and how the industry is using it. And then, you know, asking some questions on any particular challenges. And in particular, there are basically 15 questions that covered around explainability, you know, data usage, cyber risks, third-party oversight, and then, you know, on the consumer side, basically fair lending and equal credit, and how these, you know, potential AI can impact, you know, different parts of the business, from backroom to, you know, customer facing. So it's very informative, in very formative stages early. The comment period just closed in June 1st, 2021, so a few weeks ago. You know, within that RFI, just outside of kind of the regulatory purview, it does talk a little bit about kind of, you know, data training and the data sets, and how, you know, using that could possibly, one of the risks is, you know, amplifying biases, or possibly, you know, amplifying inaccuracies. So, you know, are there any proper guardrails established as you're training the data? And, you know, specific to AML, I think, you know, what Hal was talking about is kind of, you know, kind of where we're trying to see how the industry is evolving, you know, from way back when I was doing anti-terrorist financing, we're back to rudimentary, you know, structuring of transactions and anything, you know, but around $9,000, to now where we have a lot of different payment types, you know, from P2P and crypto, that are outside of traditional core banking systems. And how do we integrate all those different data sets into a kind of meaningful monitoring system? So I think that right now, with regulatories, we're kind of monitoring, we're supportive of the innovation. We're looking at how the industry is using this particular technology, and asking for comment to craft possible future guidance.
Mm-hmm. Okay, so I guess you're saying you're definitely see the regulators being supportive of these initiatives in terms of the way forward.
Yeah, at this point, yeah, exactly. And then monitoring kind of what the industry is doing. And I think that in terms of kind of the support, I think it's good news that the regulatory agencies are asking for comment and factoring in the industry's comment into future policy or recommendations or guidance. So so here's an opportunity to really influence, I guess, the future regulatory oversight.
Well, absolutely. And I mean, this is a key thing that has been in the discussions for many years, that, we need to be interacting more. And I don't know if, Hal or Brendan, you had any, experience yourselves, but, obviously working closer in the market and sharing information, which, we haven't necessarily been doing very well, good at in terms of being financial institutions ourselves or with our vendors. And then even I think less so, working closer with the regulators, because obviously people are a bit, kind of trying to keep the distance, but it's important that we work closer together. And if we think of I know how you talked about the technology, obviously, and you, Brendan, but what about that people aspect of what we see the data scientists specifically as that the profile of the person and the role we expect to play? Where do we think the key attributes are for the profile we should be looking for?
Yeah, and I think as you kind of heard from Duke, I think we're evolving, right, to trust maybe AI and ML a little more in what we do. And as we do that, I think we look to the analysts to help inform us in terms of what we're seeing out there and what we can do. And I always tell people, people ask, they say like, well, is artificial intelligence trying to put people out of jobs? And I always say, no, absolutely not. I think we can use the technology to leverage the people we have and apply them in smarter ways. So, the analysts can help us realize or look at transactions and then say, hey, focus on these ones because these look the most risky, and these ones are probably okay. And that feedback loop gets smarter over time if we apply. That's what machine learning is all about, right? The machine gets smarter over time because we train it, or we can train it to become smarter. So those analysts are really key to what we do because they help us get the insights into the data and in these transactions and help us figure out what's risky and what's not. So I see it more as a people lever, or as a workforce kind of extension than a replacement program for people we already have. We need to help them work better and smarter.
And I think in many ways, it's everyone has that role, right? You have the data scientist that doesn't necessarily know what structuring means. Where the AML team will help influence and advise how to put a structuring algorithm in place, or to understand that there's been some significant developments over the last couple of years around explainability around linear systems. I think there's a lot of work to do around nonlinear, but you need to have both the data scientist paired with the respective business problem, call it AML, call it BSA, what have you, to understand why these triggers happen, why we consider this person a higher risk versus another individual or another customer. It allows that business context to be able to overlay the data capabilities. And I think that's a real differentiator. You know, bring those kind of teams together to each can play their role in concert of solving that business problem.
Mm-hmm. Absolutely. And Brendan, I mean, given you are responsible for, all the technology aspects in your organization, how have you seen that being, these kind of skills addressing specific areas of the risks that we have? Because obviously, you've got a technical capability that probably looking to address many different issues.
So we've taken a very simplistic approach. I think we follow the notion of keeping it simple, in that we create these kind of small teams, or have created these small teams where you're pairing a data management or a data scientist with a fraud expert or with an AML expert, and then they work together on series of sprints on set deliverables, and then they incrementally go through it in that way and solving problems incrementally. And at the end of the day, the overall aim is to be able to develop something they can put into production so they can move on to the next problem. And be able to, if you pair those teams together, to bring in this kind of business context and combine that with the analytical capabilities, it's a marriage made in heaven when you be able to put those things into production, and then they can follow on to separate other business problems they need to solve, whether it's on, I think that everyone's been struggling on beneficial ownership. I think that's been a huge problem set for us all. But the amount of data that we have at our fingertips, being able to combine external, internal data, different product sets of data, business products, that is, with this new environment has been really, really beneficial.
Yeah, and also along the people side, on the regulatory front, we're trying to encourage more, I guess, closer partnership between the data science and the technology infrastructure group with the business, so that what they're building is there needs to be a translator somewhere in between, and the closer the partnership, it minimizes that translation, because then whatever is being built can easily be understandable from the business side. And so we're looking at how does an organization kind of marry the two very disparate parts of the organization together, and work, having the people work together on that.
That's such a good point, to bring together the subject matter experts and the folks that are doing machine learning or data science, and make sure that you have that combination. So one without the other is not a recipe for success here.
No, absolutely. I think we've all experienced previously, technology building something that they think the business needs, and then realizing it's not what was expected, and these communications need to be addressed. But also, I think the mix of the skills and marrying that understanding of what the actual risk is, even if you are the technical person, is quite important. And well, not one person can do everything, right? So you need to have that collaboration. And I guess, as you say, Duke, I mean, I guess you expect that people can come out of their cave, the very technology maybe cave that they're sometimes, and explain what they've actually done, right?
Yeah, because if you take a typical audit, right, where we go in, we talk to the business first on the users of the output, and and hopefully they can easily explain that to us, because we're only there a limited number of weeks, and so and typically they we don't want to see dragging in the data scientist that then has a different language, and then we're kind of back to square one. So I think that as part of that kind of the whole governance and in class, the data architecture, et cetera, setting up front and then having the output in similar language that the business expects, it will be very helpful.
Yeah, and actually, I don't know. How do you guys find it easy to find this kind of people in the market, or do you think there's a gap in terms of the skills that we need to be concerned about, and as an industry helping?
I think from a people perspective and resource, the size of the organization makes a difference, right? The bigger the organizations that use this technology are able to find those skills, right? The service providers that provide services to the banks, they would have investment in those particular skills, but some of the adoption rate is a little bit less in the smaller organizations, so they're relying more on, I think, service providers rather than building their own in-house data lake and data science, and that's where I think some of the, I guess, where I think Hal alluded to it, right? Trust. Well, I think once there's sufficient trust in any of the market models that are out there, there might be wider adoption. But right now, I think it from the range of banks, that the smaller banks are slower to adopt, because basically I think comes down to trust.
Yeah, absolutely. Brendan and Hal, anything else on that?
Well, maybe I'll get started and get the ball rolling with Hal as well. I think that it's more of solving interesting problems. I think while I agree with Duke's view that it may be easier to fund some of these roles perhaps with larger scale, I think that it really depends on also attracting talent that want to solve interesting problems. And if you have smaller institutions, nimble institutions, that's why the growth of the fintech environment is, because they can solve uninhibited, interesting problems using interesting technologies and experimentation and things of that nature, which is much interesting sometimes to a potential a person in the marketplace than elsewhere, than perhaps a larger bureaucratic organization. So I think there is a nice blend, and I think that there is a marketplace, and we're seeing it at the full scale, but it's always about interesting problems. But there's also that underlying economic aspect, which Duke was hit right on, is that the more data skills that you have nowadays, it's a valuable asset, and it's hard to get it, because a lot of people are after kind of similar skills.
Absolutely.
Yeah, I think it's become a very, very competitive market for this skill set, and which is great. I think we see schools emphasizing it more, so I think we're investing in the future the right way. But right now we are certainly seeing a lot of competition for these roles, and because they can make such a pivotal difference in our companies and what we're doing, it makes sense. It's just a very competitive market.
Yeah.
I just say that there's spoke about a lot in the marketplace, where there's the more of the modern companies versus the large, call it legacy institutions that have been here for centuries. There's a shift in mindset, in that the folks that have started companies over the last 2 decades have had a data first mentality, a tech first mentality. That's a hard cultural shift that some large institutions that have been around for centuries have to go through. So that's certainly a struggle point. The struggling point is that the data teams need to have flexibility, techniques teams have flexibility in ability to innovate and test and learn, versus some of the larger institutions where it's much harder to do to execute on such risky processes.
Mm-hmm. Yeah. And do you think then, I mean, how from a vendor perspective, I mean, we are actually, we're talking about fintechs, obviously, is that, maybe a case for looking for these skills then, through your vendors or through other collaborations compared to what we're used to doing? Because obviously banks usually like to have resources internally quite often, not depend on third parties, whether it's systems or people.
Yeah, I think that's a great point. And I think all of us need to decide, what's core to our business and what we need to own, and who we want to have be on the team, and then what problems are going to be outsourced to third-party vendors. So we have to make those decisions about what's central and core, and what data do we want to collect and keep and understand, and then what do we farm out. I think it's really interesting to look at machine learning and artificial intelligence as just a broad technology, and look at all the great companies that have sprung up to solve very specific problems in just the huge amount of space that creates. So and it's just a ton of opportunity. But I think it's all about picking those things where what's core to us, what's core to our business, and what do we where can we go find a trusted partner for certain things that we don't need to own.
Okay, thank you, guys. So I think I guess it's very important to be able to combine we're saying it's very important to be able to combine those the people and the technology skills in there, and address those actual business problems, rather than just building a lot of technology and having a lot of data, which maybe we've done a lot in the past, but not necessarily with the right focus. So I think that's a key message. So if we move to if we talk about cybersecurity and data strategy, which is our other big topic here. Brendan, if I come to you maybe again first, what's can you introduce us and talk to us about where what you've seen, the evolution that has been up to now? We know you've mentioned already that how many of the efforts in terms of building big strategies and for data or big databases have not really produced the right results. And also, if we put that into the context of all the cybersecurity threats that are really heightened at the moment, where do you think we are from an institution like yours and your experience as a CTO?
Well, I think sorry, I double mute on that one. I think it's a challenging problem. I think the whole globe went remote in a matter of days, weeks, and months. Some institutions were very nimble and essentially prepared for such a transition. We fortunately, speaking of my institution, if you will, we were able to make a pivot in a matter of days, and that's because in many ways we were taking the principles and approaches beforehand, before the pandemic hit, to say how can we be mobile, how can we be solving this problem so people can work or on any device at any time, anywhere. That was an investment strategy that we developed, call it a year before essentially the pandemic. So it fortunately kind of rolled into that, and we saw the benefits. But I'd actually broaden the topic of modern technologies a bit more to think of much of the kind of software as a service based risks that are present in not just because we're all remote, because of all the net new capabilities that are coming to market, and being able to access and use and move data to these software as a service providers. That's where I do truly think there's more third party risk than first party risk. Because you're essentially leveraging many of these parties' control sets to manage some of your most sensitive data. So I actually think it's not necessarily pandemic related, but the evolution of technology, evolution of software as a service, evolution of that business model has created a much larger exposure.
Yeah, and how, from a vendor perspective, where do you see what you're providing as the solutions working? Within the context of, being able to manage those challenges, especially now?
Yeah, when we look at, knowing your customer and anti-money laundering and the degree of fraud that's going on, cybersecurity is such an interesting area, because, you're not only just solving kind of a financial problem, a computer science problem, with data and security of that, but you're also fighting what turns out to be a real world adversary who's actually very innovative. So, unfortunately for all of us, we're up against, this innovative culture of fraud, of things like ransomware, and thinking of how it's delivered to us. And we've all heard it a million times. Like, the number one thing is weak passwords, right? The number two thing is phishing emails and being susceptible to those. We all know risk mitigation strategies for cybersecurity, but how we apply or use vendor technology to solve these issues for us is really important. And so I think it's important to go out and really study the vendors, figure out what they do, if they solve their problems, if they tout certain technologies like AI and ML, dig in. Do they really do it? How do they do it? What's the proof that they do it and their effectiveness of it? So we've got to understand all those issues around it. And unfortunately, the world's a super complicated place right now because of all this the cybersecurity concerns and the risk to our businesses. And I saw a stat, I think it's a year or so old, that says that 60% of businesses that are successfully breached through a cybersecurity event actually go out of business. That's 60%. So that's it. When we talk about threats being a existential threat to our business, we're not just saying that. It's not hype. It's actually existential, meaning you can go out of business, if these things are, successful in attacking you. So very, very important that we're up to date and kind of schooled on what the state of the art is here.
Yeah, absolutely. It's one of these things that people don't pay that much attention to quite often until something goes wrong. And Duke, what about the regulatory side? Are you seeing heightened focus from your side?
Yeah, I think with the recent, as Hal mentioned, the recent ransomware attacks really kind of brought, the attention to impact of the business to the forefront, and how, organizations are dealing with those challenges. And when, you have huge databases that are locked down from ransomware, what is the alternative if they're used to make, critical AML decisioning rules? How does a business, what is the cyber resilience in the event that does happen, right? And as I guess, as the AI tools become more critical, right? I think these risks are then magnified. And what are the alternatives in the event that there is a ransomware or there is a cyber attack? And what is the alternative now for, if all the decisioning for AML BSA is driven off of, and the monitoring, how quickly can an organization, stand up an alternative? And I think these are challenges. I think that, as the industry matures in that area, I think we'll be monitoring also.
Mm-hmm. And then where do we think the balance is at the moment? Because obviously we've talked about well, we talked about data, we talk about third-party systems and vendors. We're all looking to, as we said, use the right people, the right place, and create an ecosystem. But that probably, creates more of these risks. I mean, do you guys think that, your own organization, you're quite comfortable to just go and say, I'll move my data to the cloud, quite easily to run those, those processes, or I'll give it to a fintech to help me do that? Or do you find that it's very difficult to move in that direction?
Yeah, I mean, I think one consideration here is minimizing the amount of data rather than maximizing the amount of data we collect, we hold, we keep, and so I think there's starting to become a turn towards not just collecting and keeping all the data you can to have information about your customers, but actually being a better steward of that data and actually collecting less data, and it produces less of a kind of an attack surface area, for the bad guys. It makes us less vulnerable to breaches and accidental disclosure of PII. So I think, maybe the world's starting to sort of, come around to maybe a more minimalistic view rather than just to collect and keep everything we can about everybody all the time.
Well, there's always a big temptation to get a lot of data because they have loads of value by some people. But yes, sorry, Brendan, go ahead.
No, I was going to say it's fascinating that an attack that's existed now for probably 14, 16 something years around ransomware, now that it attacked the kind of gas supply and the meat, some meat suppliers, now it's generating the more of the public interest that I think it was required for at least the last 2 decades. So I'm optimistic. I think we have shared optimism that that institutions are doing the right thing around minimization of data, because I think Hal nailed it. We just need to be much more deliberate around what information we absolutely need. And with that minimum set of information, we have a high bar around our controls. And then we hold our third parties responsible for those same level of controls, if not higher. That way we all kind of raise the water to a certain degree, that we can protect our customer base as well as our companies and countries the like.
Yeah, I mean that's very interesting because I mean GDPR in Europe has that concept exists very much in it. My perception has always been that maybe in the US and North America things are a bit a bit different in terms of data privacy and not so regulated. And Duke jump in obviously here might have completely wrong. But it's very interesting that you guys say that, especially since, we're talking now about, we talked about ID verification. We've got countries using biometric data. We're storing so much more information that are, not even just, they're not just personal information, as we call it, but sensitive information. Well, we've got a pandemic going and, we've got health records all of a sudden being used for various purposes. So, Duke, what's the regulatory view on that?
Yeah, no, I think, GDPR it was more recent and it is probably more advanced. And I think our domestic, I think Gramm-Leach-Bliley Act, or commonly referred to as GLIBA, and that hasn't been updated in a while to reflect some of these new challenges, right? It was a framework that was set back then that were for a different set of environment than what we're dealing with now. And I think that with this new RFI, I think the regulatory agencies are trying to kind of, understand how, AI is going to be used and then maybe update the regulatory posture or policy regarding the data privacy and protection and how that data can and can't be used for and how it, and what are the limitations and the consumer impact.
Okay, and in terms of, I know we talked about a lot about the threats, just to wrap up, our key points here in terms of the collaboration. I know, Brendan, you said, luckily your organization was ahead of the curve. I know, from my point of view, we had to do a lot of things. Hopefully we were able to react very quickly and build out our capacity. I'm sure, lots of other organizations were in the same place in terms of not necessarily expecting to have, for example, everybody working from home, in a day. So do we think that, in terms of the security and the collaboration that we need to put in place? Where are we? Where do we see that working, and what does it mean in terms of any further threats that we might have to deal with?
So I'd argue that it was a wake-up call for a lot of institutions in terms of the welcome to the 21st century to a certain degree, and that the success north of 2021 will be on the basis of strong technology controls and good use of data. It's been a wake-up call to many institutions that they need to invest in the people that can introduce technologies and services to keep their companies current. And when I say make the investments around technology and data, that's implicitly stating that there are security, cyber control aspects of this, because cyber is no kind of Teflon that you can throw around something. It has to be built from within. That's why I give so much appreciation to Hal bringing up the topic around data minimization, because that's the rights that you need to take that principled approach in developing systems. But I think in many ways, going remote and showing the explosion of the tech market yet again is just showing a big wake-up call to the rest of the different verticals that are slow to adopt technology, because change is coming.
Yeah, I would agree with that. And I think of sometimes it seems like we're making progress in sort of small increments, very predictable increments over the past, maybe, you look back 5-10 years and you think, like, how have we evolved into a more mobile society, less dependent on like the local area network within the four walls of our business, right? How is personal and business computing and networking become more sort of fuzzy, in terms of a delineation. And I think the pandemic has sort of jumped us forward in time, like 5 or 10 years, in a discontinuity we weren't expecting. And so as we all went home to work and we all figured out new ways of working and collaborating, it introduced a bunch of stuff, right? And everything from, we read about dietary changes and all these things, right? Relationships, but also think about our security posture and how our sort of computing environment has changed in our expectations for, walking into a local branch of our bank or conducting any kind of a transaction face-to-face versus virtually. So, and as we change those things, then there's all the fallout. So the security fallout, the transaction speed fallout, the data, knowing your customer and your identity fallout. So there's all these things that are sort of fallout of that. And we're having to deal with all of that. So in a timetable we hadn't expected. So it hasn't been like the 5 or 10 years preceding at the same rate. Suddenly we're doing this at a new rate. So we've all learned, I think, some new things to sort of drill in on to be successful here.
Absolutely. And Duke, any view again from the regulator in terms of any additional concerns or expectations? Or
no, I think that, just like the industry, I think we were also caught off guard with the pandemic. We had a pandemic guidance in 2007 that I think everyone had to dust off, and then also dust
Nobody
off.
read.
Exactly, and then people had to dust off their physical security, incident response plan. I think that with some of the protests and so forth, I think some regional banks were more prepared for not being able to access the physical location, and they had to start thinking about what do we do for corporate office remotely. And so I think that drove some of the strategy for some organizations, but some who were staunch work from the office, they were kind of caught off guard in terms of how to deploy secure hardened laptops, remote access equipment, and then the traditional model of thinking, okay, we only need to think about the corporate employees domestically, those that had call centers, and how do we that they didn't have access, how do we now get equipment to them in a secure manner that was handling PII and personal data. And so I think that caused some I think some evolution in some of the processes, and I think that that the pandemic plan won't be in the back of the shelves anymore. And I think it'll be tested more regularly.
It definitely looks like it. Okay, so we've got about 8 minutes. So, anyone who's listening to this, please drop any questions. I think we've got a question waiting. I'll try to address that in our chat. But, I think I'll just summarize this great discussion that we had today in terms of, the protecting the financial institutions from the security breach and financial crime. So I think, talking about the data science and the role in AML, I think, we said that it's very important to, just think of the technology, but also combine that very much with the people skills and making sure that you've got the right subject matter expertise rather than just focusing on building big technology capabilities or data capabilities that we don't necessarily get as much value out of as we thought a few years ago. The environment is changing a lot, and also, we talked a lot about data privacy and minimizing, the data that we use for the various processes as well, which I think is quite important in terms of, the cybersecurity and our data strategy, because again, that's not necessarily what we've been doing in the past in terms of building, big data lakes and just having loads of data available to us that, sometimes, we don't necessarily understand anyway, so we don't get the value out of it anyway. And I guess from a regulatory perspective as well, which is really important, is that, we need to keep in mind that, the regulators, and I think that's a common theme as well across other countries from my experience, is that they're, very much engaged in the process. And we need to work close together to understand where we are in this journey of utilizing AI and all the technology capabilities that we've got now to be more intelligent about what we're doing. And finally, in terms of that collaboration, I think, nobody would disagree. It's here to stay, working remotely and needing to have access to, more data and more information. So, I think, we've got the ways of managing that, but again, just being focused, I think was one of the key things I picked up from everything you guys were saying in terms of what we're sharing, how we're sharing it, is an important thing rather than just building, big capabilities, just driven by technology. Any final comments from you guys before I try to address the questions we have on any of these? Anything to add?
Maybe the only thing I would add is I think both Duke and Hal and you did touch on it, and on the physical security aspect. This is where I truly think the consumerization of technology is going to hit eventually, and that you're going to see much of the convergence of the physical and cyber and AML securities come together. So I think that's a thread that we should probably pull in a follow-up discussion. But that really came to light as we went through the pandemic, is how do you connect these disparate data sources so we can be informed about people's movements, how they're accessing, how they can get access, how we can control access, things of that nature.
No, absolutely. So, we'll wait for our fintech connect partners to organize a discussion. So I've got a question here, which I'll have to ask you guys to see if we can help me answer it, because I'm not sure I 100% understand it myself, probably due to my lack of knowledge. But so the question is, AI can have problematic algorithms and blockchain is value agnostic. Is this a necessary hegemony of protection? Maybe, I don't know if the person that's asking wants to elaborate a bit more, but any
yeah, I can take a quick stab at that. So
thanks, Hal.
and maybe first of all, so blockchain is something I've looked at for a long time in security. It's a little bit problematic. It's the general ledger problem as applied to security is certainly a deterministic way to do security, but there's it kind of depends on the problem, was I guess the short. Maybe AI can have problematic algorithms. That is definitely true, and we touched on that here. Is how do you take out bias from AI, and it's very difficult. And I think there's some things around what we've talked about here, like fraud prediction and knowing your customer and AML, that we need to make sure that that the algorithms are can be held true, and we know why they make the decisions they do. And it turns out that it takes a lot more computing horsepower to know why, not just the outcome of these AI transactions in ML. So everybody has to make kind of an additional investment in their AI or ML capability to know why the algorithm says what it says. So it's almost like a hygiene measure we all have to take because we're operating in this sensitive environment. So it's an investment we have to make.
Absolutely. Okay. Yeah. We need to know what what's in the background, being able to explain it, as we said. All right, great. That's wonderful. I think we'll wrap up here because we're right on time. Thank you very much, Duke, Hal, Brendan. Great discussion. Definitely very informative for me. I hope for the people that listen to us as well. And looking forward to any further discussions in the future.
Likewise. Thank you. Thank you for having us.
Thank you.
Yeah.
Have a good day.
Thanks.
Bye. Thanks everybody for attending.